Hello guys, and welcome once again to another YouTube video. So today's video is going to be about invalidations of Ttrades Fractal Model. And the first thing we're going to look at is a bullish candle. Now for a bullish candle, we expect the candle to move up or to expand up. So we want the candle to open, print a low, expand upwards, print a high, and then close, right? And then for a bearish candle, we want the candle to open, print a high, expand lower, form a low, and then close, right? So for our Ttrades Fractal Model, we always want to apply internal range liquidity to external range liquidity. That is what we use to find our daily bias. And this internal range liquidity are fair value gaps, order blocks, breaker blocks, change in state of delivery. And then external range liquidity are swing points, right? An old swing high or swing low. So when our key level gets hit, we want this schematic to happen at that key level. We want this being our second candle to take the previous candle and then close inside its range. So for this example, we are bullish, right? So we want the second candle to take the previous daily low and then close inside. And immediately we close inside, then we can focus on trading the third candle. And we expect the third candle to be an expansion candle. Another way you can explain this is accumulation, manipulation, and then distribution. You get it? So since we expect this third candle to be a distribution, to be a continuation candle, and in this scenario we expect it to be a bullish candle, how do we want it to open? We want it to open, form a low, expand upwards, print a high, and then close. So we want this candle over here to open this way. If I'm to ignore this wicks, we want it to open this way, right? Print a low, expand upwards, print a high, and then it will close, right? So another way that we can use to expect where we want this third candle to open is to mark our candle 2. Now when I say candle 2, that is a reversal candle or that is a manipulation candle, right? We want to mark it with our Fib 2. And since we expect a continuation, we want this third candle to open at the upper half of the Fibonacci 2 and then expand, right? So we expect a bullish candle. So we want it to what? Open, form a low, expand upwards, form a high, and then close. Do you get it? Now, in this same scenario too, we are bullish, right? But then let us look at how the candle printed. So we could see that we had our candle 2 reversal over here because it took this previous daily low and then it closed inside the range. Now, let me explain this. When I talk about closing inside the range, that means that the candle came, raided the low, and then it closed inside. Do you get it? If it does this, then it doesn't mean that it has closed inside. The body closed outside of it. We want the body to be inside the range of this first candle. Now this is the first candle's range, right? This is the range of it. So we want it to close inside of it. You get it? Of course, if you do not get it, we have to watch my previous videos so that everything will be clear for you. Now in this scenario, we had that closer inside, and then we expect this third candle to be a distribution candle, a bullish distribution candle. In other ways, we expect it to open this way, but let's look at how this candle opened. In this scenario, we could see that the candle opened here, and instead of coming down to print a low, the trader went up and then took the previous daily low, the previous daily high, and then started closing. Do you get it? Now, since the candle just opened immediately and then it took our targets, we are not going to trade this third candle. We will move on to the next pair, right? Because we wanted this third candle to rather open, form a low, right? So that we can engage by trading the price to our targets. Because in this scenario, our target is still intact. Our target hasn't been met yet, which means that we can surely trade to hit that target. But in this scenario, when the candle just opened, it took the previous daily high and then it is coming down, right? Which is kind of printing a bearish candle because this is signature of a bearish candle, right? Now for this reversal candle, one way that we can confirm this reversal candle is by looking for a change in state of delivery on the 1 hour time frame, right? So let's say that you go to the 1 hour time frame and want to confirm this reversal candle. Now, how do you confirm this reversal candle? Now, one signature of an expansion is a sharp movement in and out of a key level, right? So to confirm that price indeed wants to reverse, assuming that we have a key level over here, right? And then the market comes and tag that key level. You want to see a sharp movement in and out, which usually prints kind of a V shape, right? And then you get your change in state of delivery. And that change in state of delivery will confirm this reversal candle. Now, the next day you can go to, now this is the 1 hour time frame. If you use it to confirm your candle too. Now, the next day you can go to the H4 time frame, right? Which you want to focus on trading this third distribution candle. Now, on the H4 time frame, you get to realize that when the market came down and then tagged that fair value gap or whatever, they say this is your key level, you can see that the market will come and then it will displace. Now, that displacement will leave a fair value gap, and that fair value gap should tell you that smart money is involved in that price leg. And when smart money is involved in a price leg, they leave footprints, and those footprints are fair value gaps, right? Now, this third day, when this third day opens, you'll get to see that it will open over here. Let's say it opened this way, and then it printed a candle. Do you get it? Now, you look at your previous candle, and then you realize that if not yet formed a reversal candle, then you should wait for a reversal candle to get formed. Do you get it? Now, when a reversal candle gets formed this way, right, and then this candle took that previous candle and then close inside the range. Now, in other ways, you can say accumulation, manipulation, right, and then distribution. So, assuming that we had this reversal candle and then our target is over here. Do you get it? Now, we form this accumulation, manipulation, right? And let's assume that this happened before 1 a.m. opened, right? So since we've had this reversal candle and we've confirmed the change in state of delivery on the M15 time frame, then we expect the 1 a.m. candle to distribute. Let's assume our target is still intact. If so, we still expect the 5 a.m. to continue. And if the target is not met, then we will expect the 9 a.m. to continue. Do you get it? Now, when the reversal candle gets printed, it gives you a clear bias for price because your manipulation is already done, right? And if price manipulates, what happens is expansion, right? So accumulation, manipulation, expansion, it is that simple, right? So if the 1 a.m. forms a reversal candle, then we will expect the 5 a.m. and then the 9 a.m. to distribute. And we are going to target 4-hour liquidity levels. Now, when your target is met, avoid trading. When your target is met, avoid trading. So thank you guys for watching this video. If you've not subscribed, kindly subscribe and also watch my previous videos. I did so many examples in them. You can take it from there. Thank you guys once again.